Are you speaking their language? Welcome to this week's Friday's Food for Thought. It's a question that deserves your attention today. Are you communicating clearly with your prospective reverse mortgage borrowers? Also, are you using the same approach that you did 3 short years ago with a typical needs-based borrower? And will your communication be effective for today's new HECM borrower who is less motivated by sheer need and is looking for strategies to help them retire or age in place? Now, for the most part, our industry has been product driven. That is, here's the reverse mortgage, here's how it works, and would you like to take an application? Now, while that may be an oversimplified example, it does in fact illustrate our industry is poised for a new approach. Now, imagine for a moment walking into your doctor's office due to a strange illness. What if they launched into 2 or 3 recommended prescriptions without even asking you any questions or giving you a thorough exam? Would you trust them? Would you have any faith in their recommendations or professionalism? Today, to be a true reverse mortgage professional, we must first move from a product-focused sale to a consultative approach. Why is that? Because we're going to find ourselves facing a more informed consumer who will have a variety of choices, and the HECM is only one. Now, what's going to set you apart? Do you have the skills necessary to communicate clearly to their financial advisor if needed? Also, we're going to have a detailed financial assessment in January, but this will never substitute for good fact-finding and interviewing skills. So first, ask them what are their goals. Is it to retire an existing mortgage payment? Do they want a side fund to draw from in case of emergencies or when their portfolio is not performing in a given year? Ask the question and then listen and take notes. Second, explain the non-recourse debt. The HECM is exceptionally different from any other debt or mortgage that they've held before. Let them know that their reverse mortgage is only secured by the property the loan is made on, and no other assets can be attached or used for repayment in the future. Third, no debt service. Now, it may seem obvious to us, but do not overlook the need to remind them that the reverse mortgage requires no monthly debt service or loan payments versus credit cards, home equity lines of credit, or past mortgages that they've had. Fourth, never start with a product. Now, after you've made a clear picture of their goals by interviewing them, paint a scenario that illustrates what life would look like after they got a reverse mortgage. Imagine waking up one morning realizing you don't have to send in that mortgage payment each month. Or imagine peace of mind in knowing that you can use your line of credit in years where your retirement accounts perform poorly, or you know that you're helping leave more money in that account when you're going to need it the most. And don't forget to explain the impact of taking too much money from a retirement account to support their lifestyle today, especially when the account has little or no growth. They want enough money to last a lifetime. A reverse mortgage doesn't guarantee it, but it may decrease the chances of them depleting their retirement assets too quickly as we are living longer. Now, we are not trained financial advisors, but that does not mean that we cannot ask intelligent and meaningful questions. After all, the new HECM will require a new breed of educated and well-rounded originators. Now, what are your thoughts? Leave your comments in the comment section below, and don't forget, have a great weekend.